We had retail sales came out this morning, and they unexpectedly, I don't know how that's unexpected, but stalled in July. Disappointing markets that expected a 0.1% increase as inflation eased slightly but remained high in July. Yes, inflation is still high at 8.5%. We now have this Inflation Perpetuation Act signed into law, releasing another $1 trillion into the economy. So, there's all of this talk. The analysts, the economists are expecting the Fed to continue increasing rates because inflation is still a little bit out of control. Well, a lot out of control. Let's just be honest about it. And the markets don't seem to be believing that. The markets are rebounding. In fact, the S&P 500 is up, I think, 18% since its mid-June lows. So in 2 months, it's up about 18%. And the market seems to be pricing in easing or maybe even cuts in the Fed funds rate into 2023. I don't think that's necessarily what it is. I just think that there's so much money out there in the economy, it has to have a place to go. And now we're going to put more in. The money supply went from somewhere around $14 trillion to upwards of $20 trillion in and around what all the government did, the money it injected through the pandemic. And now we're adding more money. Where's it going to go? It's got to find a place to go. So, the stock market, equities are a hedge for inflation. Inflation is high. Rates, bond rates are still, subpar, not a great place if you're trying to hedge off 8.5% inflation. So, I don't know that it necessarily is about rates, and I think the Fed's going to have a ways to go in doing that.